Welcome back to the channel. I hope you're having a fantastic day wherever you are around this gorgeous planet of ours today. Here on the Gold Coast, absolutely amazing. Blue skies, sunny, warm. It is summertime here now. But for the crypto markets, it is definitely winter. But I want to shed a little bit of hopium onto the market today because, like we saw in yesterday's video, a lot of the good what we are trying to build in our portfolios is created at this time, but it is so hard to believe that it is possible moving forward. So for this video, I've uncovered something that looks pretty interesting when you compare the S&P 500 and Bitcoin. Now, I want to keep it macro, make it simple for as many people to understand as possible as we start to move in towards the next bull market, which can take many, many months. But if you're wondering, should I buy Bitcoin now? What will the price of Bitcoin be in 12 months' time? This is the video for you guys. So stick with us. Let me know in the comments down below if you have any questions. Follow me on Instagram and Twitter. I'm doing Q&As over on Instagram, and use the official links in the video description down below so that you don't get scammed out there. I only have one account of each, and we can follow up on more about this particular analysis over there. Essentially, I want you to survive the bear markets, not get screwed out of your money with all the dollar cost averaging in on cryptocurrencies, not including Bitcoin at this stage, and then know when to get into cryptocurrencies as they start to show signs of strength. That is not yet for cryptos, as I've pointed out many times before on the channel here. In particular, yesterday's video identifying cryptocurrencies which are never coming back and ones which you can look forward to in the next cycle. So make sure you are liking up the content. Thanks again for all of your support in the bear markets. I absolutely am enjoying every moment of it because in those in the bull markets, there seems to be a lot of crazy people. But for now, you guys are really trying to put the pieces together so that you are here for the next cycle. Make sure you're subscribed as well, bell notification icon. Do all those things that YouTube makes us do as the monkeys that we are. Let's crack on with the video. And the title is something around the collapse, which is what we're in, resetting Bitcoin, which is essentially what happens every single cycle, why I'm buying, why I am buying, and what I've talked about in terms of the buying areas and reasons why. So this is a big piece of macro analysis. Come back to it, save the video, do all that sort of stuff if you got to. So I've got the S&P 500 up here, which I want to go through briefly and relate this into the Bitcoin chart over here. Quick look at the fear and greed, just so we have this as a reference point. It is climbing up. We had some pretty significant days down. Cycle low so far for Bitcoin is at around 15,500, depending on which exchange you're on. Yet the fear in the market is still sitting higher than it was in June, when we had the first of the significant lows coming in at around 17,500. So that is this data right here through May and June. Everyone's extremely fearful, and that fear is just wearing off in the market. And this tends to be a sign at lows, at market cycle bottoms. Yes, the price can still go down further, but it seems like the timing is right about now. So that can last for weeks or months within this period of the market. Now, of course, there's a lot of things going on out there, all the fundamental stuff. You got CZ putting together a industry recovery fund, looking for projects who may otherwise be strong, but they have a liquidity crisis because everyone is pulling their money off exchanges and putting it into hardware wallets and that sort of thing. And there's a lot of improvements, I guess you could say, that are coming from different exchanges. Some of them that support the channel here as well. So, here's your little shill for Bitget and ByBit. They're putting together things like the Merkle tree proof of reserves. Now, it hasn't been finalized yet. These guys have been around through the previous bear market, looking at Bitget and ByBit. Links in the top of the video description. You use it if you feel comfortable. There hasn't been any problems with them as yet. Only keep on the exchanges what you are willing to use and what you need to run your business. Your business is trading or investing. But essentially, they're putting together some funds here and showing you proof of reserves to promote complete transparency and comprehensive asset auditing. So they still got to go through this part here, but they're in the process of doing this particular piece, the Merkle tree proof of reserves, and that goes to Bitget and ByBit as well. The fundamentals are trying to work themselves out. The timing seems to be on point here for the S&P for a low forming. Looking at the prices, it hasn't really done anything since, you could almost say, the bottom in April. We've basically been range bound between 4,200 points, so just a little over it at 43, and all the way down the bottom at 3,500 points. So it's been range bound for the last 6 or so months, yet the fear, the emotions have been extreme. You know, we got some pretty big downsides, the bounces up, the downside again, even though it's within a particular trading range right now. So these are all the pieces that I'm putting together for a bottom forming, and it doesn't mean I'm trying to catch the low, nor do I try and sell the top. It's a fool's game. You know, we just got to play it to the best of our ability and buy as low as possible, buy when there's blood in the street, hold on, the patience, and then get to that peak again. And that's what I want to look at when I'm comparing the S&P and Bitcoin right now. So I've got some really simple stuff to have a look at for Bitcoin. Now you have to have a little bit of an understanding of the cycle here for Bitcoin. We had the lows in, or some lows in 2010. We ran up into a cycle peak in late 2013, another cycle peak in late 2017, another cycle peak in late 2021, and the downtrends have lasted approximately 12 to 14 months. So the first one was 14 months into that January low. Then we had a peak of December to December, so that was a 12-month. And so far we got a November to a November, which is another 12 months. Maybe we drop into December like we did last time and give us a midpoint of a 13-month bear market for Bitcoin, that is. So everything is still working out reasonably well within this cycle. Yes, pricing and the feeling in the market, that market sentiment can always be way more extreme than what's actually going on in price. But in terms of timing is the leading indicator here, and it's working out reasonably well. Let's go back to November of 2013. So we've got the peaks in mind of the Bitcoin bull market. So this is the peak right about here for the S&P. That's the peak for Bitcoin, but this on the S&P was not the peak. The market did run up a little more, but from that November peak, the top side was only about 18 or so percent. That's a fair significant amount for the S&P, but overall, once that market started to fold, and if we time it up with the Bitcoin cycle, the low for Bitcoin was in January 2015 and August 2015. You can see that you have one bottom here in August and then another bottom here in February of 2016. The pricing basically came all the way back to that previous peak. So the thing that also happened or has been happening in the S&P and the US markets is the money printing. So during this period, I remember vividly that they were turning the money printer on and off, on and off, on and off, on and off. And you had these moves up. They said, we're turning it off. It drops. All right, we'll turn it back on. It goes up. We'll turn it off. It drops. All right, on, off, on, off. And that kept happening over and over and over again. And then eventually they just basically left it on and we just continued up and up and up. Of course, there was some times here where we had to get big corrections. Let's turn it on again at full blast, go straight up. Let's turn it off again for a longer period of time just to try and settle all of this stuff down. So let's look at where those bottoms came in. So the first one we saw was around these peaks here. So just looking at the Bitcoin top and where that bottom came in, it was basically dead on the Bitcoin top. All right. So maybe we're getting a little bit of a fast stretch here, but just stay with it and have a look at what's going on in these markets. So although the S&P was bouncing around a little bit more here, getting some highs, you can see the volatility started to swing in and then eventually load out basically back near that November top. So it's not a significant top for the S&P, but we've got a bit of a lowing happen at that time. For Bitcoin, we know the lows were January of 2015, and then we had another low in August, and then the market started to break out in later that year of 2015, and we had a little bit of a pause here in January 2016, February 2016, market ran up and we started to get this bull market forming again. So you can see that we had those January and February right here were the lows. The market started to pull away. It started to climb into another top. The top came after the Bitcoin top, same as that previous cycle here. So you had the top here for Bitcoin in November 13. The market the market started to run away again, not really fast. It was rounding over and the top came later in 2015, but it eventually came all the way back to that price. So you can see for the Bitcoin top, that was December 2017. Ethereum was January 2018. So was cryptocurrencies. And then we had the collapse. You can see here the market got a new high, but then collapsed again into December 18, which we know was the Bitcoin low. So that's going back here to this particular cycle. There's the December 18, the big drop in November, then December 18. So we go back and have a look at the S&P. You got the November and December top right there, and then back down to this December low, 13% past that point. But essentially, it was almost like the mid-level of this entire move. So it was just a lot of volatility, up and down, swaying between that price. And eventually started to move on again. And we had another little peak here in January and February, which of course Bitcoin also did as well. This was just before the COVID pandemic. So we had a big run up out of that point, another pullback, and then January, February went up. March was a drop. That's happened again here on the market. So we had a run up. You can see the market started to break out during that June, July period where Bitcoin was going on that pretty big run. That was the June peak, July peak here on S&P. Had that last few months there, and then the big crash into the COVID drop. And then the market starts to run away again. Bitcoin started to break out of those highs. So during this period of the pump up within the bear market, we're getting this bull market beginning, that November period was really quite strong as it broke to new highs, and the October also broke out of some key resistance levels. So that was a pretty key point for the S&P and Bitcoin. Then we ran into the highs. Bitcoin topped out in November. There is your little November peak. The S&P followed after again. So that's the third time now that the S&P followed after Bitcoin because there's more money printing going on. Printers get turned off. Inflation's way too high now. Let's come back on this retreat. So what we've just put together here is just having a look at what's happened on the S&P and what's happened with Bitcoin. So S&P has topped out just after Bitcoin in each of these examples. It goes on a bit of a wild volatility ride here to find a low, generally around a similar time, if not just after as well. But for Bitcoin, it tends to lag a fair bit here and go through a longer accumulation zone while the S&P has found a low and then starts to move. So sometimes that low is around the same time. Sometimes that low is just slightly after, but nonetheless, the pricing is quite similar to what that first low was. So if we move forward from here with October, we rise up to the data points that we're looking for in November or December, and then pull back. Maybe it's slightly lower, maybe it's around the same price. This is still all working towards that low being formed for S&P and for Bitcoin. Remember, this is macro. It's going to take months. So on the Bitcoin chart here, now we go and have a look at what's happened from November. So 12 months forward from the November bars. Now, all of these green vertical lines are the November bars. So from these November periods, we can see from 2010, the market was higher 12 months later from November. Again, 2011 into 2012, market was higher. This one is going to be a little more relevant because the market had already come back a significant amount from the peak in June 2011. So that one's a little more relevant compared to the November breakout in 2010, even though it was still higher. So moving forward again, 2012 into 2013. 2013 was the peak. What happened after the peak? Well, November was of course lower because November was a all-time high month. So going forward again, we have November 2014 to November 2015. The market didn't break down in that November, but it was still closed higher 12 months later. We went through a big accumulation zone, and then 12 months later, Bitcoin closed higher. 15 into 16, it was higher. 16 into 17, much, much higher, going into that bull market again. And the December peak was the all-time high for Bitcoin. So in that Q4, not a good time to be buying BTC because you look 12 months after that November period, market had crashed. But again, 12 months from 2018 into 2019, even though they were both down months, it was still slightly higher in 2019 than 2018. Going forward again, 2019 into 2020, up month. Then we had the all-time high in November 2021. So not a great time to be buying as the market was approaching an all-time high. And of course, marrying this in with our cycle analysis of 4-year bottoms and 12-ish to 14-month bear markets, not a great time to be buying Bitcoin at those peaks. So 12 months on, here's the crash month. What are we going to see 12 months from now, 2022 into 2023? From looking back at the last couple of cycles, so ideally we'd love to have more data, but just using those two, we can see that the last times this has happened where we've had November with a little bit of a holdout here, then you had the dump in December and January. November was still higher. November higher again after this big dump month. So we've got a significant dump month so far, 20% on November of 2022. Can we see it close a little bit higher 12 months from now? As I said it early in the intro, I wanted to shed just a little bit more hopium on the market during these dark times of FTX going under. How can any of this be possible with all the narratives that are going on out there as if crypto is dead, it's over? Can it ever recover from this? I know I'm getting a lot of questions like that on Instagram and on Twitter as well. So can it recover from here? Yes, I believe so. Nothing has essentially changed in that regard. Should we see a slightly higher high, that would just carry on with the data that we've seen over the last 12 or so years. Slightly lower, still within that realm. What we don't want to see is this continue down and down and down for months on end. And of course, that is possible. This is trading and investing. There are no guarantees. But going back on the data that we see here and the data for the S&P, it's looking more likely. So the probabilities are in the favor of this particular pattern playing out again, that we'll get somewhere around the current opening price of the November bar or higher. So there's quite a few macro things coming together. We can see the pattern of the S&P looking quite similar to what has occurred over the last 10 years. That's also playing into the pattern of Bitcoin, the timing of Bitcoin with our bottoms of around 48 or so months from bottom to bottom. The bear markets, similar timing here, 12 to 14 months from top to bottom. The November bars looking pretty similar to the last couple of cycles. It's all coming together. Remember, this is not going to end just this month or next month. These patterns take time. Like you could see from the previous cycle, June to August, approximately 8 months before it broke out. You had the dump in December, and then it basically broke that high of the bar in May of the following year. So that's another 6 months. So we could be looking anywhere from 6 months to about 8 or 9 months, which would then take us into May 2023, or just after summer of 2023 as well. So there's still a fair bit of time to play out here. The biggest hopium, the upside, if this wasn't to occur for the hopium side, is that you would want to see this month, November, bounce from these lows, wherever it may be, if it's 13, 14, 15K, and close above the previous month's lows. And those previous month's lows are at 17.5, and these closing areas here of about 18.5. So if this was to happen, that is a much, much stronger Bitcoin than what we have seen in the past. I hope I've been able to fill you with a little bit of hopium in these dark times of a lot of cryptos going down. Go and check out the videos that are popping up on your left-hand side here. Like if you found some value, subscribe for more macro trading content here. And of course, check out the links to Bitget and ByBit. Links in the top of the video description. I'll see you guys at the next video. Until then, peace out.